Okay, it's with great pleasure that we re-welcome our first Market Huddle guest, Brent Johnson from Santiago Capital. As I mentioned, the milkshake maven himself. It's a pleasure to have you back, Brent.
Thank you. Glad to be here.
So you and I were chatting the other day, and I thought that it would be great to get you on and just kind of continue our discussion. And one of the things that I realized is that a lot of times, you and I might not disagree about stuff in terms of our philosophical fundamental framework about how markets operate, but we definitely agree about how much is built into the price and how and where we are along in this process. And one of the things that was struck me the most was that I have recently become increasingly concerned that most of the investment professionals have already allocated a fair amount to the U.S. Kind of financial markets, whether that be equities or even bonds. And I worry that the next move might be for them to shed some of those assets, thereby creating an opportunity to be short dollars and actually for the U.S. stock market to underperform. And you kind of countered and said, I'm worried that it hasn't even actually begun, and that this move into U.S. assets is still just in the infant kind of stage, and the really big kind of move into these assets is still ahead of us. I was just wondering, kind of maybe we could continue that discussion. So what do you think?
Sure, that sounds great. And first of all, I should say, for people out there listening, I think this is a great example how it's totally fine to disagree with somebody else, and it can still be cordial. It doesn't have to be on
right.
Twitter where everything evolves into like a nuclear war, right?
That's right.
I've seen some of your posts over the last month or so, and I reached out because I thought I understood what you were saying, but I wasn't sure, and I wanted to, and I thought I disagreed with some of it, but I wanted to make sure I disagreed with it before I started launching, missiles at you. And it was a great discussion, right? So anyway, I just think that's something for everybody to keep in mind.
So everyone just be aware the missiles are going to come now that Brent understands my position properly. He's going to launch the missiles. So what do you think? Where are we? Because I was struck by the fact that we actually did agree on a lot, but that you were concerned. One of the things that that struck me most about our conversation was that you said, I think this is just starting. Forget about almost ending. And maybe you could comment about why you think that it's just starting, and the fact that this is going to get a lot worse before it gets better.
Well, basically, I think it's only just starting, and I think I might actually be early. It might call for the dollar to really break out. Now, I've been calling for that for a couple of years, and there's this axiom in the markets. Being early is the same thing as being wrong. Now, being wrong about the breakout hasn't really hurt me because the dollar hasn't fallen, but it hasn't exactly broken out yet either. And I think that it's going to break out. I think we're going to have a fairly big move in the next month or so. But I always try to figure out where I could be wrong, and I can totally see a case where that wouldn't happen. And I think I know why that wouldn't happen. And so I guess my point is if it doesn't break out right now or in the next couple of months, I don't think it negates my thesis. Maybe it just means that I'm still early. And part of the reason I say that is a big part of my thesis is built upon chaos in the rest of the world. And that chaos in the rest of the world, it hasn't really started yet. Now, I think everybody's a little bit surprised that markets have held up as long as they have, whether you're talking about U.S. markets or European markets or the China market or Australia or Canada. I mean, all the markets are, they're kind of going sideways, right? Some of them are going sideways to up. Some of them are going sideways to down. We haven't seen this big move or chaos trade anywhere really yet, other than maybe Turkey or Argentina.
Right.
And so I guess my point is that, that's why I still think I may be early, because until the chaos really breaks out, I don't think we're going to see the really big dollar trade.
All right, Brent. So I want to ask you, though, okay, because generalizing the dollar, I understand why you believe on the bigger picture that's that case. But in your thesis, do you have particular currencies that your attention, cross currencies that your attention is turned to? Because obviously, when we're talking about the Dixie, then we're talking about the euro having a huge weighting inside the basket.
That's right.
I mean, is your attention still very much on the euro in this circumstance? Like, where do you believe that that the big weakness will come that will propel the U.S. dollar higher?
Yeah, so again, this is a good point. When you look at the DXY index, it's been kind of flat to sideways for the last, call it 2 years or whatever you want to call it, right? It hasn't really broken down, but it hasn't really broken out. That's mainly because it's the yen and the euro that it's against, and the majors have all been, I guess, somewhat stable. If you look at the
Right.
dollar against a number of EM currencies and global currencies, it's kind of clearly broken out. But I think that the chaos will start in Europe. Now, I can very well be wrong. It could easily happen in Hong Kong or China or Japan or somewhere else. But my belief is that the initial chaos will start in Europe, and it could happen
Brent,
very soon.
right, you were saying that you think the U.S. dollar breakout is very imminent. So do you foresee a situation where the even as bad as the news is in Europe, it continues to get worse?
Yeah, absolutely. And so I want to take a step back really quick and this plays into kind of the dollar action over the last 2 months as well. I have never said that the dollar is going to go straight up with no pullbacks and that it's just going to be this great, beautiful event for the United States and just horrible everywhere else. I don't think that's how it's going to be. I think it's going to go in fits and starts because I think as the dollar starts to strengthen, there will be actions taken to try to weaken the dollar, whether it's by the Fed or other monetary authorities or other central banks trying to counteract that move. That's exactly what we've seen over the last month. Earlier this year, as early as last year, and then earlier this year, I kept saying that when the debt ceiling is raised and the Treasury starts issuing bonds again, that is going to be a big event for the dollar, and that's going to push the dollar price higher. And sure enough, as soon as that Treasury issuance started again after the debt ceiling was raised in August, you saw the dollar start to move up. It got to almost 100. And, we've had the problems in the repo market, and subsequently the Fed has kind of come in and had to provide liquidity. That is helping to push the dollar back down. I don't expect that to stop. I think every time the dollar starts to make a move, official actors will react to that. And so we were going to have these periods where the dollar breaks higher, and then there's action, and it pulls back for a while. And then we'll have a trade higher, and then they'll react and they'll pull back. Kind of the opposite of 2008 with the equity market. The equity market would fall. The Fed or the Treasury or some financial authority would come out with some new plan or some, accommodation. The markets would rally for a little while, and then they'd roll back over, and then they'd have to. And so I think it's kind of going to be that same way.
Okay, so Brent, one of my theories is that if you remember back a couple of years ago, Trump didn't realize the power he had in terms of instituting tariffs unilaterally.
Yep.
And there was Kyle Bass had that famous line. He says, "Nobody better tell him because when he does, he's going to figure it. He's going to use it." I've kind of wondered if the same thing's going to happen on the FX market, in that he's going to figure out that he does have some power. Now, people will tell me it's limited in terms of devaluing the dollar. And I've been wondering if we're going to have a lot more volatility in the market. But one of the things that I've noticed that you've been saying is if he really wanted to use the power of the dollar against the rest of the world, he would actually cause the dollar to rally and actually make a strong dollar. Could you just expand on that thinking and also talk about what you think in terms of whether Trump will do that and whether he will figure that out or whether he will be trying to actively devalue it?
Yeah, so to be clear, I do not think that Trump is going to devalue the dollar. Now, I will admit right up front that is perhaps the biggest risk to my overall thesis, is that he does decide to do it. So I'm not saying it's impossible. It is definitely possible. I just think it is highly unlikely, and I don't think he will do it. And in fact, I think he can use the strong dollar to his advantage much more so than the weak dollar. Part of the reason is because as much as he wants to turn us back into a manufacturing powerhouse, even if he devalued the dollar right now, we don't really have a huge manufacturing industry to take advantage of that right now. Now, sure, it would help us from an export perspective, but we're not even really there yet to having a manufacturing economy. This is going to tie a little bit to my overall thesis as well, is that the strong dollar is hard on the U.S. long term, and I fully admit that, but it is even harder on the rest of the world, primarily because despite all the objections to the contrary, most global trade still takes place in dollars. most debt in the world, even outside the United States, is still issued in dollars. And as the dollar gets stronger and they become harder to come by, it's harder to service that debt. It's harder to get those dollars to trade with. And it puts pressure on foreign economies more than it puts pressure on the U.S. economy. And, whether it's via sanctions or whether it's via SWIFT or whether it's via the dollar just getting stronger, if you limit access to dollars, it has enormous consequences on those countries and those currencies. All you have to do is look at Venezuela and Turkey and Iran as 3 examples. There's no reason that Iran couldn't have a huge economy other than the fact that they've had sanctions on them. So anyway, that's part of my reason why the strong dollar is a bigger advantage than a weak dollar.
Do you believe that what's been happening in the repo markets and the fact that they've had to provide that liquidity is sort of proving your narrative? I mean, do you think that it's not connected? Like, do you think that this builds upon your bigger thesis?
Oh, it absolutely does. It's exactly part of it. My contention has been that there are not enough dollars to go around to satisfy the incredible demand for dollars. Now, it doesn't matter if people like the dollar. It doesn't matter whether they would prefer to leave the dollar. It doesn't matter that the dollar is hated. What matters is that the dollar is owed. And what I mean by that is there is $20 trillion of U.S. dollar debt in the United States, but there's 13 or 14 trillion dollars of U.S. dollar debt issued by entities outside the United States. So I don't care whether you like the dollar or hate the dollar. You need the dollar to service the debt on which you have borrowed. If you look at the demand for dollars just based on the interest payments alone, it's well over $1 trillion a year, perhaps as high as $2 trillion a year, just to pay the interest. Not only that, but a lot of the principal payments on a lot of these bonds or this debt that has been issued outside the United States are coming due over the next 2 to 3 years. That is demand for dollars, and there's just not enough of them. And when the Treasury comes in, which is the biggest buyer in the world, when the U.S. Treasury issues bonds, they are buying dollars from the market. The biggest buyer coming back into the market from which they've been absent is very bullish for the price, and that's exactly what you saw in September.
All right. Well, Brent, listen, we're going to move on because I know you wanted to share a tale from the trading desk with us. But before we get to that, you're actually going to be joining me out at the Silver and Gold Summit in San Francisco, your hometown. Well, not your hometown, but that's where you're residing right now. I'm looking forward to seeing you, first of all. But Marin Katusa decided to put us both on the same panel. And this is going to be an interesting show.
Can I interrupt there? Brent, I saw that it was Brent, it was Grant Williams, and then Patrick, and I was like, that's like 1 year. Who was the fourth, Patrick? There was a fourth.
Oh my God.
It was somebody else of good quality, and I thought to myself, this is like when you're playing bridge and you just desperately need the fourth. And you're like, geez, who can we get? No, it's Patrick.
Me.
No, it's Patrick.
Anyway, Brent, you're going to have to cover my ass, all right, buddy? No.
Sounds good.
But listen,
just remember, whatever I say, it's all in good fun.
Absolutely. I'm looking forward to it. Now, but listen, normally, whenever I travel, I try to put together a little market huddle meetup because Kevin and I are together. Kevin's not going to be out there. You willing to grab a beer with maybe some of our listeners if we were to hold a market huddle meetup there during the Silver and Gold Summit?
Sure. Happy to do it.
Well, there you go. So listen, let's target maybe Monday toward the end of the show. We'll do the hotel lobby with beer. So any of our Market Huddle listeners that want to join us, Brent Johnson and I, and we'll prod Grant Williams. We'll see. I doubt he'll join us, but we'll see if he'll do it. But we'll go out for a beer. It sounds good. Anyway, we'll send out an email accordingly to do that. But okay, let's move on.